Dan Roccato joins us now to talk more about what a strong dollar means for the economy and for you. He is president of Quaker Wealth Management. Dan, welcome to NBR tonight. Thanks for joining us.
Hey, Bill, Raquel. How are you, Rahel? Hi, Bill.
You know, for years, Treasury secretaries have said that a strong dollar is in the best interest of the U.S. economy. But now there's a lot of hand-wringing about that. Is it the case still or not?
It depends on whose interest you're talking about. So from a consumer perspective, a strong dollar is terrific. It's like getting a pay raise without getting any more money in your paycheck, because when you and I and Rahel go to a store and buy imported goods, they're a lot cheaper, right? So for you and I as consumers, at least in the short term, a strong dollar is a good thing. And it also throughout the economy ripples through and lowers the overall pressure on inflation. Again, we would think that's a good thing, at least in the short term.
Right.
And finally, grab your passport, go on sale, because Europe's on sale. It's a great time to be a tourist with a strong dollar, right? Because your dollar goes further in overseas markets.
Dan, what about for corporations? So we've already heard from a number of companies this earnings season point to the strong U.S. dollar, how it's hurting their earnings. How does this impact companies?
Yeah, bingo. So for every winner, maybe there's a loser. And in this case, when we talk about companies, the reality is that most of our companies now are multinational, global companies like Nike, for example, where they get a big percentage of their sales from overseas consumers, overseas customers. Well, guess what? If the dollar is stronger, that means those overseas consumers are probably going to buy less of those products. And even if they buy the same amount of those products, when we convert it back to dollars, those companies will feel it in the bottom line because they're getting less dollars for that product.
And many times now, with the dollar doing what it's doing and other currencies around the world, companies have to make the decision. Do we make things here in the U.S. or do we make them overseas where it might be cheaper? But now you've got these tariffs to deal with as well.
Exactly. So it doesn't make a CFO's job any easier, Bill, right? So this stuff is complicated, but we always like to think of it in the short term and the long term. The short term, a strong dollar certainly benefits a lot of Americans. There's no doubt about it. In the long term, though, it does make our businesses somewhat less competitive. And in fact, one could argue we might lose jobs in the long term, right? Because as those jobs move overseas or, U.S. factories shut down, clearly that's not a good thing. So in the long term, what could be a virtuous cycle in the beginning becomes a vicious cycle later on.
Dan Roccato with Quaker Wealth Management. Good stuff on the strong dollar. Thanks for joining us tonight.
You got it, guys. Thanks. Have a good night.